I like to go over the weekly market stats just to give me perspective. And one of the things I want to look at is the weekly changes in the indexes in other markets. One of the first things you'll notice is bonds and how narrow the range in bonds is. No bond volatility, and that's very telling. When there's volatility in the bond market, then there can be more volatility in the equity markets. And when there's not volatility in the bond markets, you have to wonder how accurate the volatility, if there can be volatility in the equity markets. There can, anything is possible, but one of the things that's interesting, if you look at this Nasdaq, ran up here from last fall to February, pandemic hit, and the market rallied. This was an extreme rally, and you have to wonder why, if prices should be this high in a pandemic, and we know that the number one fundamental is the Fed. And then because it did run up so much, it ought to pull back, and it did. It finally pulled back, but only about 10 to 12% here. And you think, well, it's due for more of a correction than this, but because the Fed has its back, will it? And looking at the weekly numbers, volatility looks narrow, selling looks narrow. A lot of chop right in here. Last time the market was this choppy, and we're just looking at the Nasdaq right now. We'll look at the S&P in a minute. Last time the market was this choppy on a pullback, it rallied. We knew no Fed stimulus happened. The market's waiting for more stimulus in here, and so it's a little bit choppy. And so if this market pulls back, much steeper pullback here, a lot of chop here, and then the Nasdaq rallies from the low down to the 69, 78, 75. If you doubled that number, it's about 14,000. Nasdaq futures hit 12.4, so about 1,500 points from doubling. And if the market doubled again, or worked on doubling again, we're talking about same sort of move would be about 19 to 20,000 in the Nasdaq potentially. Would be similar to the dot-com bubble, and that's what we've potentially looked at two different scenarios. We've looked at the megaphone pattern, the market crashing down below these lows. We've also looked at a scenario where the Nasdaq nearly doubles from here, and so you have to keep both in mind when you trade, to have opportunities in both directions, both long and short. And so the weekly closes is what I want to talk about right now. And the Nasdaq closed down 110 points on the week, which is not much considering the ranges were so high on the week. The range on the Nasdaq was about 800 points from the high on Wednesday to the low on Friday. That's a big range, 800 points in 3 days. But on the week, it only closed down 110 points. And so what did the S&P do? The S&P had about a 140-point range from the high on Wednesday to the low on Friday. Keep in mind the Fed with the FOMC this on Wednesday as well. And the market's waiting for a potential, another stimulus checks. Also, the pandemic numbers seem to be rising a little bit. Coronavirus numbers, not pandemic numbers, but the close on the week on the S&P, here's last Friday's close right here, and here is this Friday's close. So it only closed down 6 points on the week, and about 140-point range. The S&P's weekly difference is only about 6 points, while the weekly difference in the Nasdaq is only about 110 points. And so it did all this. And then you have this narrow range in the bonds, and you see the VIX. The VIX actually closed down on the week. The VIX closed down about 1.04 points on the weeklies. So the VIX traveled. Here's the path of the VIX on the week. Here's last Friday's close. It moved down. It keeps testing this 25 level. Thought it might break down 25 before Friday's close, and then it spiked up a little higher. And then it still closed down the 25 handle. So it's kind of stuck in this 25 handle. It seems that it closed here in the 25 handle 3 out of 5 days, 26.04. That's close. So 3 out of 5 days, it closed in the 25 handle, trying to support 25 on the VIX technically, and the market is not. It's not selling that much with the S&P only down 6 points on the week, and so I'm not bullish necessarily. I'm not one of these guys that's always saying be a bull, always buy, always stay long. Not at all. But just based on what we're seeing with the Fed and what we're seeing in this price action, just wide ranges. There's not a lot of change in actual price with all this wide range, and VIX is relatively low. Volatility in bonds is relatively low, and we're coming into the election cycle. I guess the most contrary concept of the election cycle would be if there were no volatility, if volatility in the markets died as we went to the election. That would be a contrary concept, because last time there were elections, the volatility was very high, ranges were high, and so gold, it was up $14.20 on the week. Not really a big move. You see that volatility has decreased in gold, and it looks like it could be poised for another move higher after this strong move up and then a pullback. So those are the stats on the week on some of the markets that we look at, some of the markets we trade. Also notable is the commodity markets. Want to look at those. Here's a weekly chart, the continuous contract of soybeans. It is over 25% off its lows. We talked about this earlier this week in April, end of April, about 5 months ago, 814.68. High on Friday in soybeans was 1046 and 6/8, over 25% move off its lows. And could this be inflationary? It's possible. Be interesting. It's always interesting to think of where the mega moves will be and what the call options are out of the money, if they would ever be in the money. And those are kind of some long shot trades, kind of anticipation. You can hedge against inflation. In your mind, your concept to take a trade where you say you're going to hedge against inflation by buying call options in commodity markets out of the money, cheap call options in the future to see if those markets actually, if we ever did get inflation, how high could soybeans go? 15, 20, 30, 50. You never know. We could see all-time highs as we do in some of these markets. Let's look at crude oil next. So these are back-adjusted contracts. We know the front month traded below zero, and now we see crude oil bouncing back. It had two-week sell-off, and now it's coming back. Crude oil is coming back this week. Strong gain on the week after the low of last week in the 36 handle, up about $5. That's a significant move in crude oil. And will it close this gap right here and then move higher? Could crude oil go back to 100 in inflation? You have to wonder about demand in crude oil and how that works with inflation. If we're in a pandemic and there is less use of energies, interesting concept there again. But anything could happen in futures. It's hard to know all the fundamentals, and something to watch here with inflation. So those are some of the numbers, some of the weekly stats I wanted to share with you to keep perspective in your trading and how market movements could happen in both direction, and the size of those markets could be large or small. And where we were we discussed our portfolios in the previous video, so it's a good time for trading in Q4. Q4 is coming up in about 8 more trading days left in Q3, and so some of the portfolios are in a slow drawdown, and now it could be the time to trade Q4 because Q4 could be seasonally strong. And that is the update for the week ending September the 18th.